Good evening, everyone. Welcome to IQI Canada Evening Talks. My name is Yousaf Iqbal, country head of Juwai, IQI Canada, and it's definitely an utmost pleasure for us to invite back to Anthony Mendes, who's an insurance broker with Able Insurance. Last year, Anthony, thank you so much for giving up some valuable insights about insurance, and a lot of questions was being asked to us, and we said, okay, we're going to ask Anthony a question to come back on that. So, welcome, Anthony. How are you doing?
I'm doing good, Yusuf, and nice to see you in the new year. You done well for yourself. You look good.
Thank you so much, Anthony, and thank you so much for being, a regular person in sharing content with us for our viewers. Let me tell you, the kind of message which we get from people, they really appreciate, and there's so many things when people think that they're so easy. And they think they're already done, but when they actually go through a process, then they realize that how the insurance things act on it. So thank you so much for that. So what I'd like to do is that let our audience know, because today we'll be talking about the home insurance in today's appeal market, and at the same time, this will be divided up into two parts because this is a long topic as well on that. As you know, the market is going on, especially when we talk about real estate. What we have seen is that market is being going up and down and things like that. I also want to understand, obviously, because the insurance and home insurance and everything and real estate is so connected together on that. So what is creating this turbulent market scenario? What is a hard market in the insurance world, Anthony?
So, Yusuf, we'll take what is creating the turbulence in the market.
Yeah,
So there are many factors. Uh, the biggest one is the interest rates are going up. Uh,
that's right.
the economic condition is not so great.
Hmm.
Inflation is very high. So all these factors are creating that market. And from the insurance point of view, when we talk about hard market, what's a hard market? So the claims are going high. Just to give you a sense of the claims, till today, it's January 19th, till today, 32 vehicles in Toronto are being carjacked. 32 vehicles and
Wow,
22 vehicles per day. 22 vehicles in the Peel region.
wow, wow, wow.
So who's going to bear this? From where is the insurance companies going to pay all these claims?
That's
So they're
true.
going to pay these claims, of course. Accidents and other stuff is a different thing, but carjacking, this is the highest than the previous year now.
Yeah,
I'm just talking of this year, January 19th. So 32 cars in Toronto region per day and 22 cars. So these are the claims that are happening in especially in the housing market. Bad weather, water damages,
yeah,
floods. All this is creating big problems for the insurance markets. And when there is a hard market, they do not want to write business. So a lot of people tell me, oh, the insurance companies have made a lot of money. That's why they don't want to write the business. It's not that. They
yeah.
are in the market to make business. They want to do business. The issue is they do not have a capacity to do that kind of business. So they are losing in capacity.
Hmm. Hmm.
So that's creating a hard market.
Very, very interesting. What you're saying is that absolutely agreed, especially the carjacking thing going on in terms of the cars getting out on 32 vehicles up till now. That's really a number to
Per
look
day,
at the way
32
per
vehicles per
day.
day.
Per day,
That's
22 vehicles per day. That's quite a number of vehicles on that.
yes. And the Peel region, another 22 in the Peel region.
Wow, wow, we're trying to repeat on that. So that brings me to my other question, Anthony. What are the risks involved in a hard market?
Good question, Yusuf. What is the risk uh, to the consumer or to the insurance company?
To both of them?
Okay, so we'll talk from the consumer's point of view
Yeah,
because that is what we should
yeah,
look at, right? Because
yeah.
we are in this together. We want to serve our clients.
That's right.
Uh, no matter some of the people may not be our clients, but still, it's a service to the community that we can give. Right?
Yeah.
So to the consumer, he will not get insurance if uh, how he will not get insurance in a hard market uh, if he takes extra loans. So you would have seen a lot of people are uh, going back and getting second and third mortgages on
Yes.
their properties. So from where will that money come in? From where insurance companies don't like to take more than two lenders on a property.
Okay.
So as soon as, secondly, uh, mortgage brokers, they are very smart. They can get you a private lender to give you to lend,
That's
but
right.
insurance companies don't accept private lenders.
Oh, okay.
So that is becoming a problem. So what happens is you have got your financing ready, and now the closing is going to come, is at hand, and you don't have, and in the lender is asking for the certificate of insurance, and that is not available. Insurance companies will deny that. They will say, sorry, we cannot give you insurance on a private lender.
Okay.
What do you do? Where do you go? You go to the high risk market.
That's
What
right.
happens at the high risk market? Insurance becomes expensive. The premiums go up. Coverages are less.
Hmm.
People don't understand. People, for them, the main thing is to get the money. They're not looking, God forbid, if that house would catch fire, how much would they be covered for? If there is a
That's right.
claim, what is covered, what is not?
That's right.
So those are the big risks that, the consumer has to look into. Uh, so, yeah. And what's your next question?
No, definitely. Thank you so much for that. I mean, that's really a very important point. What you brought in here is that because as real estate broker, as real estate agents, and when we are helping our clients, it's very important for them to understand when they are doing their mortgages. Now, especially if they're getting into the private funding and the insurance companies are not doing it on that. I really like the point what you said about the risk involved because a lot of time, people think like getting an insurance and that's it, but then actual work comes in when insurance claims comes out there, and then people start looking at the policy. Oh, I wasn't aware of this, I wasn't aware of that, and things like that. So it is very crucial, very important to understand that what are the risks involved in terms of getting and a
The
high
proper insurance.
insurance on that, exactly on that. So we are live with Anthony Mendes, who's an insurance broker with Able Insurance. So my next question to you, Anthony, is that what should the consumer be aware in such markets?
A consumer should know, very important point again, on his policy documents, he would see on the front page, page number one,
Okay,
where all the amounts or coverages are mentioned. The first thing is the building value.
okay,
How much is he covered for? So suppose, example, it's always good to talk with examples, right?
sure, sure,
So Yusuf, you tell me, as a realtor,
yeah,
when you value a house, a property, you will value with the land.
that's right,
And you would say, anybody would say, my property is worth 1.4 million,
that's right,
example,
yeah,
right? That is how we talk, right?
true,
And I should be able to get a loan of 1.4 million on my
exactly,
property.
yes,
Insurance companies don't look at the land value. They are
okay,
looking at your building value.
okay, very important point, nice, okay,
So if you have a building value of say 500,000
hmm,
only, God forbid if that house was to be burned down, so the insurance company will give 5 million. But you would say my property was worth 1.4 million and I should get 800,000.
yeah,
The claim would be denied because
okay,
insurance company has valued you're paying a premium for only $500,000.
very nice, interesting, very interesting, okay. So in this kind of scenarios, what should be people be looking at? Because I think when you're saying about that $500,000 for a building cost, it's basically building up that property again on that. That just brings me to one of the questions. Now the value in terms of the property. built up has gone up as well as the suppliers and things have gone up as well on
That's right.
that. Are we supposed to be looking at talking to insurance broker and maybe looking into our policies in looking at that what is the value of my property in terms of the building would be for the coverage?
So as a realtor, you would be better in a you would be in a better position to answer that question. So suppose a 3,000 square foot home
Yeah,
in today's market, how much would it cost to build up a house of 3,000 square feet? $300 per
yeah,
square feet,
per square foot, exactly.
350,
Yeah,
or
yeah,
$400. It
that's
depends
right.
what kind of house there is, right?
Agreed, agreed.
If it is an upgraded house, then it's $400. If
Yeah.
it's a standard home, it can be between 300 and 350. So you take
Mm,
a thumb rule just to calculate. So you multiply 3,000 by 350, 350.
that's right.
Do you have a calculator? Can you do that?
Absolutely, I can do it for you. For example, 3,000 into 350, you're talking about a million fifty.
A million fifty. So this is what that first page should have, 1,050,000. That's where you get your idea. Okay, my property's evaluated properly by the insurance company. Now, if you go to another broker, he might say, "Oh, I can get you a better price," but he might make this property value lower
Makes
by
sense.
saying, "I have analyzed it at 700,000." Right? So you would get 700,000, and your premium would be lower at 700,000.
Yeah.
So you would save money, but you are, in fact, you're a loser.
Very, very, very good point again, Anthony. So important to understand that we always try to, as consumers, I'm talking about myself or anybody the consumer as well, we always try to go and try to get those pricing of the insurance are a little bit lower and don't look at the coverages part of it. And as I was saying in the beginning, the coverages part will only come along when something happens on that. But why? In order to mitigate that risk, you should actually try to get that insurance or that value covered up in upfront rather than doing all that. Thank you very much, Anthony. I mean, I know it's a big topic, and this is just in episode one. We'll continue in episode two. Anything you want to say before we say bye to our audience?
I would say just, get in touch with me for better knowledge.
Absolutely. Anthony's contact information is available right on our screens as well. He's an insurance broker with Able Insurance. Thank you, everyone, for watching us. Thank you so much, Anthony. We'll talk to you soon in our next episode. Thank you. Bye bye.